It is real data that comes direct from contractors for contractors in the industry. Kelley, who should be reading this report?
I think anyone and everyone who touches the industry should be reading this report.
But this kind of gives you the playbook of the things that you should start implementing and looking at so that you can scale.
This is the second year of this thing. We've got 2023, we've got 2024. So between those two reports, what changed the most?
How quickly technology is taking over and being invested in.
One of the interesting pieces that came out of it this year, which I frequently forget about because for so long, a lot of my career was in a very mass transit friendly place, but just vehicle costs.
If today's business and the data says we've got to be better at that soft skill part, how do you start building that into the culture of your organization? How do you start developing that?
Remember the feeling of what it's like to sort of have a disruption or a displacement that these folks may be going through, whether it is a home or an office or a business, right? Like this is disrupting somebody's day life livelihood. Anyone can tear out sheetrock and dry a carpet and set up a fan. The reason we are successful and the reason our people are successful is because they make the people who are involved in that understand why we are doing it.
Hey everybody, Jeff Jones here from Violand Management, and you are listening to a special Violand's GPS podcast reroute session where we get away from our normal standard style and we go into something very specific. And today we're going to be focusing in on the RIA, Restoration Industry Association Cost of Doing Business report, powered by our friends over at KnowHow. And joining us, I have from Violand, Miss Kelley Dolan, who not only is a Violand Business Advisor, but she is also an RIA board member, and the CFO from Thomasville Restoration, Mr. Jim Eckard. Jim, thank you for joining us today.
Yeah, thanks for having me.
So this report is a monster. The version I got is very small typed, very smushed together, and it is still 60 pages. What was your thoughts when this thing first came across your desk?
Hey, we just got through a strategic planning event that we held in September and have done the last couple years where we go through every part of the business with our leadership team. And I think that was around 200 slides that we went through. So this is right up our alley. But I think everything was very concise in terms of the points, and it's really just all nuggets included in there. So I think everything in there is things that we have been talking about as we've been trying to scale this business. It almost fits perfectly with the conversations that we're having every day here at Thomasville.
Perfect. So can you give the audience a real quick introduction about yourself, about Thomasville, and then tell everybody what the RIA Cost of Doing Business report powered by KnowHow is?
Yeah, I'd be happy to. So I'm Jim Eckard, CFO at Thomasville Restoration, a full service restoration contractor based in Baltimore, Maryland. I consider myself kind of the nerd here at the company. I spend all my time in Excel sheets and, trying to communicate trends and things that I see in the financials and our operating metrics with the different members of our management team so that they can take action and help us grow the business in the most profitable and efficient way possible. I think about my position here at Thomasville. I think the visibility I've been able to provide, and then that's exactly what the Cost of Doing Business report is trying to give to smaller contractors and really any small business owner in terms of the way to think about your business and the things to put in place so that you have visibility to be able to scale over the long term. And whether you're in line with all of the certain margins or the metrics, ultimately it's the conversations and the trends are all going to be things that will be faced with your business. And at the end of the day, that bottom line, that income profitability, right, is driven by all of those factors. And we're giving you tools on how to manage and drive to the right results.
I love it because it is real data that comes direct from contractors for contractors in the industry. Kelley, when you went through this thing, what popped in your mind? Who should be reading this report?
Ooh, I think anyone and everyone who touches the industry should be reading this report. When we started doing this a couple years ago with RIA and KnowHow, it to me felt like the most comprehensive data set for our industry, right? Which is doesn't really have a governing body to do this, right? And RIA is not even a governing body. RIA is a trade association. So taking this on as a big project, trying to get all this data, which we all do different things in our own datas and systems and how we manage numbers, trying to get all that in a way where you can report it out kind of in a global way has been really, really challenging. What I love about the concept is I think we do small or large restoration companies, right? Without something like this report or an organization like RIA who's offering you this kind of stuff is we get really in our bubbles, right? Like we know our numbers in and out. Like I'm sure Jim could rattle off a bunch of his own numbers, right? But like this gives us insight into what our colleagues are feeling, gives us insight to what does the next step look like. Kind of gives us a little bit of a path towards those things. So this report has like a myriad of uses, but for me, I say this a lot, but getting out of your bubble is one of the best things that this kind of data and this kind of information can help with.
No, I love that. So Jim, you and I were emailing back and forth here, and I loved your insight into this, where you talked about sharing what's in this report with the key decision makers in the organization. Why is it important for owners and leadership teams to share, from a financial and data perspective, both the report findings for the industry or the benchmarks that were going there, as well as current company performance against those benchmarks with those decision makers, so that they have a better idea of what's expected out of them?
Yeah, so I think really getting financial literacy educated throughout your organization just really raises the game of everybody, and it helps to articulate, when you're talking to your mitigation team, like they understand the trends that are going on in the industry and the challenges that we are facing to manage the whole organization. All of a sudden they understand the why and they can perform their duties better. And the more that you can continue to give kind of metrics and scores to everybody in the organization, they see how they fit within the larger whole, and all of a sudden decisions start to make a lot more sense all the way down the line, and we can all align ultimately on what our goals are. I think just finding ways to put metrics and benchmarks on everything you do or everything that you believe is a core part of your business just gives you a way to kind of monitor from an eagle's eye view, rather than having to be in the job file of every single claim that you might have open at the time. And when you're an entrepreneur who might have a $5 million restoration company, like you probably made a lot of that through sheer willpower and just driving it by yourself. But that's about the point when you start to lose the grasp of being able to control everything yourself. And when I think about Thomasville and where I came in, I came in and just dug in data and showed people stuff, through messing around with Excel that we could conceptually kind of feel, but you couldn't really understand or, put your finger on until you actually look at the numbers. And I feel like this is almost a guide for some of those smaller organizations that might not be able to afford a whole CFO or might not have anybody in-house today that can actually, articulate what they're seeing. But this kind of gives you the playbook of the things that you should start implementing and looking at so that you can scale and get to that next, step up the ladder. And at the point when you can, invest in that accounting team or that finance team to really solidify a lot of those metrics. So we're very vocal with all of our team about what our revenue goals are, our direct cost goals are as an organization. I think everybody knows what they need to do to help get there. And I think it's been a big piece of our success in our growth strategy so far.
Without what matters gets measured, right?
Mm-hmm, exactly right.
And if we're going to hold people accountable to hitting specific goals, this is a great way of letting them know what those are, but it's based on real factual information that the RIA has went out and surveyed and gotten from the industry, again, from contractors who know what these KPIs are. So question that goes out to both of you and whoever wants to take it first here. 60 pages, summarize it in 2 or 3 lines. This is the second year of this thing. We've got 2023, we've got 2024. So between those 2 reports, what changed the most for restoration businesses over the last year?
I think the biggest change that I feel like I'm seeing is just how quickly technology is taking over and being invested in. And I think about it from when you go to these conferences, whether RIA conference, the TPA conferences, there are just so many vendors that have so many cool products. But they all have some overlap. They all have certain benefits that others don't have. And it's easy to get sold a lot of those benefits. And, obviously we need technology to be efficient, but you have to be really specific and really detailed in your investment around technology. And, I think that goes to when it was talking about overhead dollars or overhead as a percentage going up, but labor going down in terms of overhead. It's because people are kind of transitioning to using AI and other automation tools through software rather than a coordinator or somebody that might be in-house and, working with a lot of the administrative work. But you got to be careful to make sure you continue to assess, that we're getting the benefit of all of those softwares and licenses and tools, because people don't realize, how those users and licenses can really start to add up significantly. It's something that we talk about at Thomasville is, we will really probably overanalyze any investment going in. We'll do a cost benefit analysis and really make sure that on a spreadsheet, you can clearly prove it out. And then operationally, has to make sense as well. But it's really the follow-up too, and the continued, review to make sure you're getting what you're paying for, or that you're maximizing that tool that you're paying for, because I think that's an area that you recently see a lot of creep. And that's something that's becoming difficult to manage and becoming hard for a lot of owners to wrap their head around the specific benefits and way to measure a lot of the investments that they're making in software. But we know that we have to do it.
Yeah, we have a lot of the people we talk to, whether it's at shows or through our own clients or just people in the industry, and they're constantly saying, boy, it just feels like it's so much more expensive to run a business today than it was a short period of time ago. And what you find through this report is it absolutely is.
Yeah.
The data shows it out, and it shows you exactly where it's more expensive today to run a business than it was before. And those are things that you need to know as you make these decisions on purchases and others moving forward. So let's dive into some of the stuff I found that was sort of the most interesting in what came out of it. One that really stuck out to me: single location companies, restoration businesses that have one brick and mortar, average revenue is $6.08 million. Versus $4.99 million per location for multi-location companies. So if you've got one location, on average, you're going to do just over $6 million. If you have multi-locations, each location is going to do a little bit under $5 million. That's a 22% edge in volume for those that are single location companies. So how do you ensure that the cheeseburger will look and taste the same when you open that second location, if you want to continue to get that same type of profitability?
Yeah, it's very difficult. The farther you get away from really the central organization, the harder it is to maintain culture, to maintain accountability, and to ensure that the efficiencies are there. And it's something that at Thomasville we're really wrestling with over the last couple of years as we've continued to grow and increase our service area. So we're currently servicing from Philadelphia to Richmond, Virginia, effectively almost all of that out of one location in Baltimore. But we have a satellite office in Wilmington, Delaware, which is for Philadelphia, and have some people down in Richmond, Virginia that get that work done. But it's also, there's so many people here. People just keep getting pulled back, I feel like, almost to the HQ, where it's hard to really line up the capacity and the inflow in these other locations. And a lot of times you're making the investment out of, I've got some work that I need to be able to service, but not being as thoughtful that you're going to be able to saturate your capacity in that area. So then you combine that with, not as much of leadership presence, a little bit of lack in the culture, and it starts to really deteriorate the profitability very quickly. We think about this every time we open a new market. And one way that we've been successful in overcoming is that you actually don't probably need as many fixed office locations as traditionally was viewed, I think, in the industry. And obviously it depends on what type of client base you have and what type of work you're doing. But for us, we're typically going to enter a new market with reconstruction. And that's really advantageous because you don't require a large facility for any storage of equipment or, customer contents. You really just need a truck, a project manager, and some type of estimator and subcontractor base. But I think we're flipped from what most people in our industry are doing, which is more EMS heavy. And if you are thinking about a team of hourly employees that have to drive 2 hours and deal with equipment, it becomes an easy decision that let me just open up a space and the work will come. But again, you have to continue to hawk that the work will be there and that the team is getting the same coaching and same culture that everybody else is.
Yeah, the data demonstrates that the work doesn't just come. So not only do you not double the size of your business when you open that second location, oftentimes you're going to lose business in your main location if you don't do it right.
Yep.
So one other one that's jumped out to me, Kelley, if you want to jump in on this one, gross margin drops as revenue goes up. Where do you see some potential causes for that?
Sure. I think probably overall, it's as revenue goes up, you need to invest more in the system and process and back end of the business, which has cost inherent in it, right? So as you're a larger company, right? Like I just think from like, getting started to a $20 million company, you start with a legal pad, right? And everything's on that legal pad. Or now I'm dating myself a little bit. Your cell phone notes to be current, right? And then now at 20 million, that is no longer feasible, right? It's no longer you and one tool. There's a team. There's a system that needs to support a team. There is checks and balances you need to do within that system. There's specialty knowledge you need within that system. There's probably a lot more eyes on you, oversight and compliance wise at that point too, right? Like, so there is just more pressing in upon you, where profit's just going to be chipped away. I thought one of the interesting pieces, sorry, I pointed over here because that's where it is on my screen. One of the interesting pieces that came out of it this year, which I frequently forget about because for so long, a lot of my career was in a very mass transit friendly place, but just vehicle costs, like a drastic increase from last year to this year in vehicle costs, right? And that is a lot of the world that's outside our bubble coming inside our bubble, right? So there are a lot of things we cannot control when we get of a certain size, or we couldn't control like we used to, right? We couldn't control with that one person who is checking everything. Now we've got to pay a couple of people to do that because our system has gotten larger and wider and bigger. And all the systems and processes, and as good as those can be and as smooth as a job can run, you still need more support in the management of that overall concept when you get to of a certain size. There's no way to stop that.
What I have found is when I talk to a restoration company who's around $2-3 million bucks, and I say, where do you want to be in 5-10 years? They would most likely they're going to say, I want to be $10 million. Mm-hmm. If you talk to somebody who's $10 million, they're going to tell you they want to be 20 or they want to be 50. And what this shows is the grass isn't always greener on the other side. Even though the top line continues to grow, that bottom line takes a lot of work to get there. And it comes back to why do you want to be that? Did you feel, Jim, as Thomasville continues to grow, do you feel some of those strains when you look at the margin, and especially in your position, you're definitely paying attention to the margin. Does that get frustrating? And do you have to sit and try and find ways to improve that?
Yeah, absolutely. So I will say we're probably advantageous versus most of our peers that submitted information here because we came from pretty much 100% residential TPA reconstruction. So in terms of all the sales mix impact, we had basically the worst preferential sales mix you could have for gross margin. So everything has been, better for us, but we focused a lot on growing the EMS divisions that do provide a little more profitability. And that's been a challenge just to continue to find more work in that volatile business. And the reconstruction hasn't slowed down any. So, it's absolutely a game to try and manage those percentages. One thing that I will say in terms of kind of managing through that is ultimately it's about delivering strong or positive IRR to the bottom line. So I do think like there's a lot of discussion about, well, your margin could decline as you grow, but ultimately it can become significantly more dollars that are going to the bank or to your valuation. And I'll just kind of call that out that, I wouldn't walk away from a lower margin business. It's really about, are you giving up high margin business to go after low margin business? Or if you're overextending your resources to where your foundation could crack. But yeah, it absolutely has been difficult this year. And I'd say my biggest challenge and something that I think is probably one of the drivers of that margin depletion as you get larger is just how hard it is to continue to find great teammates that can execute and deliver jobs on budget. And I think we'll talk about it later, but you just have to build an onboarding and training machine once you get to 30 to 50 million. And just from turnover alone, industry standard, 25 to 30% probably is on the low end for a lot of those production positions. So as you get bigger, it's not that same team that does all the work year over year. You got a lot of people coming in and out that you got to make sure you can get on your program and your procedures, and that's challenging too.
No, absolutely. And let's stay in line with some of that. What was surprising to me about the larger firms, you think those bigger firms, they all are just flush with cash and the owners got $100 bills under the mattress and all that stuff. But the data says, no, that's not necessarily what's taken place. The larger firms in the restoration industry are operating with leaner cash positions. They're also more heavily investing back into the business, much more aggressively than those that can't. Maybe because they can afford to a little bit, but also because they're more equipped at seeing additional growth opportunities. Median cash in restoration, it dropped to 4.9% of revenue. Small firms hold 9 to 10%, while $50 million and above hold less than 2%. Mm-hmm. So as you're going through your company's life cycle of whatever size you are today and whatever size you want to be or you think you want to be tomorrow, how do you know what's right for you? How much cash should you have on reserve?
That's a big question, Jeff.
What are some, if I'm at $2 million and I've had my business for a couple of years, where do I want to be? What do I want to factor in as I start thinking through what should be my cash position?
Yeah, I'll take it. And one thing that I'm really proud of is that we've been able to get to 4x growth on revenue without taking any operating debt. And just things that you have to keep in mind is like collections has to be your bread and butter and the most important person on your team. At Thomasville, we're all collectors, and my team, which sits under me, is our collections team. They're the quarterbacks of every job. So if you don't have assurance or you don't have trust that you're actually going to be able to collect on all the work that you're doing and recoup those investments in whether it's a job, material purchase or investments in equipment and facilities, you need to have a collections team that has your back and that you can dependably rely on what they can bring in every week or every period. And once we got to the point where I, saw very consistent collections and we had kind of limited what our floor was, all of a sudden you have a whole lot more flexibility and assurance over what your future cash flows are. And then, really it's a comfort thing. I think at the end of the day, in terms of how aggressive you really want to be, the way I look at it is to have, at least 3 weeks of payroll. If I didn't have collections, could I cover? But like if you can make an investment in a project or a teammate that can yield a 10% return versus what you can hold it in the bank at 0.2, right? Like you should make that investment, but you have to have ways to make sure, have checks and balances throughout the process and that you have access to capital if something were to go south.
That's such a good call out because I think the report mentions a few times, right? Like that one of the biggest struggles the industry is seeing is time to collect on payment. And again, this is looking at 2024 data, and I think 2025 is going to continue to prove that concept out and maybe even more extreme. But I think maybe what leads to some of that bigger gap in cash for those larger companies is they may be doing a lot more upfront cost coverage on jobs, and the return on that payment does take longer, which again leads back to Jim's point about we need to be good at collecting our money. For some reason, we really do struggle with that as an industry, and it's like I part of my culture too at my restoration company for a long time was everyone who works here is responsible for getting us paid, whether that's in like actually making that phone call, sending that email, or doing the job right so we can collect our money easily. Like it just needs to be a part of your culture and your onboarding and all that stuff we've talked about with having those good, reliable teammates. But also everyone needs to be comfortable asking for payment on our work. It's part of what we need to do as an industry, especially because sometimes the final payer of our work can be unclear. But we're willing to take that risk and we're willing to take that sacrifice and dive in order to get that work in because we love what we do. I'd ask everyone to like take one pause before we leap right in and just make sure we know who's responsible for paying us.
So, Jim, if what I'm going to hear from people who are listening to this episode right now, especially the ones that are under 10 million bucks, who've been doing this for a couple of years, who have those high ARs and are really struggling because they just don't have the leverage that some of the bigger guys have at getting collections, is they're going to say that's well and great, but tell me how to do it. Do you have a strategy that you see as working better to speed up collections,
Yep.
knowing that insurance companies are so good at slow paying right now?
Yep. I think it all goes down to basically getting a plan together as soon as that job comes in the door. And I have, 7 teammates that only collect money and bill customers, 8 hours a day, every day. And when they get a job entered in Dash, our job management system, like their immediate response is this a TPA? Is this a commercial? Where's that money going to come from in a perfect world? Or based on the procedures and playbook, they confirm it very early on, right, as it's going in production, and they have the opportunity to have those conversations with an adjuster or commercial client up front. And when you have kind of that plan in place before the work even starts, you can communicate to your project manager or who's ever on site. You can communicate early on to that customer, so there's no running away, right, from the documentation and the communication. And you're not being reactionary to where, somebody may have received a check 6 months ago, but we just got around to billing it and showed up on our AR, and we're going to hope that they still have it. So you almost like have to build systems around getting upstream rather than being reactionary. And I think a lot of smaller organizations are living from just an AR aging report, or are living from, kind of what that balance is in QuickBooks. But you really got to try and use your job management and the information that's out there through an Xactimate or open channels we have with adjusters and different stakeholders, and basically kind of make that fact on the job early on, and then everybody's aware.
So kind of a flip side of that is we're all very good at telling everybody how slow we are to get paid. But what the data in the RIA's cost of doing business report, powered by KnowHow, happens to demonstrate is we're getting bad at paying our vendors and subs. So we're complaining about not getting paid, but we're also not turning around and paying them. And there's some of that because of poor cash flow issues, of course, but not all the time. So as the data is showing that restoration companies are becoming slower in paying vendors and subs, possibly because of squeezes on working capital, do you see that as a mistake from these companies? Are they missing out on something by slow paying?
I think you could say that. I think, your traditional financial modeling would suggest that is a valid strategy, right? Increasing that cash to cash cycle. But the way that we look at it is we try to pay our subcontractors and really all vendors within 2 weeks of when they submit the invoice, as long as the work's done. And I think that's a competitive advantage, because if you have a subcontractor base that's happy and vendors that are happy and know they'll get paid, they're going to come to those jobs, even if they make a little bit less, to get paid quickly. And I think our sub base is super loyal, and they've done a great job at continuing to work with us and meet our budgets. And we've heard, some of those same stories where when we've picked up great subs where it was one check or one invoice that kind of pushed them out the door. So you do have to be careful. And part of it's protecting that next dollar up ahead, not that one that's behind. And the way you get that next dollar is by having a capacity through subcontractors and your own teams to be able to continue to produce more work coming in. So I think it's important and something that we're investing in. And we're actually now within the last month doing ACH origination. So as we expand our service area, like now we can take the mail out of it and just give people money, that day once we cut that ACH, and something that seems to be received pretty well.
Yeah, I think that's a big competitive advantage. You have to remember that a lot of your subcontractors don't want to be good business people. They just want to go do the work.
Yeah.
And so they do live invoice to paycheck much more than a traditional company will be. And if you start getting a reputation of slow paying your subs, and then you start to wonder, well, you can't get any subs, there's probably a correlation right there.
Yeah.
So
There's also an opportunity to kind of spread your good business practices there. If it is that they're giving you kind of invoices that you can't really work with on your end, right, because of your documentation needs, do you have that opportunity to teach them and show them, like literally show them in whatever their software is, like, hey, and a likelihood that there's QuickBooks involved, right? Like, hey, in this field in QuickBooks, I need you to put this information so I can use this properly on my end and get you paid faster, right? So there's a bit of like the ability to kind of increase their business knowledge by working on what I need from you, what you'll get from me.
Yeah, without it. Great. Yeah, if you can help them run a better business, they don't have to run a perfect business, but they can run a better business. You're doing them a favor, not just for the work that they're doing, but helping them build a better life, build a better company. And that's what we're supposed to be in business doing here is creating better experiences for everybody we're involved in. Now, earlier we talked about overhead, and we said the data showed that the overhead is getting higher for restoration businesses, and that's the beauty of the RIA's cost of doing business report, is it gives you the data that actually you can use to make these decisions. So let's apply that right here. You have an industry average on overhead rose from 36% in 2023 to 38.53% in 2024, which when you try to go back and factor in the idea of 10 and 10, none of the numbers are going to work. And Jim, you know numbers better than I do. You're going to tell me that that's never going to work and you're never going to be profitable there. So understanding that your overhead has gone up, and while it may only sound like 2.5%, that 2.5% is a big deal. That's a lot of sales that you have to bring in to overcome all of that. So how do you go about evaluating expenditures moving forward based on the ROI and making that a top priority versus I went to a trade show and the rep said that's piece of tech sounded really cool and I should buy it?
Yeah, that's a great point. And I'll call out too. So a lot of times when you're talking about percentages, going like a 2.5% increase on a margin, right? It's 2.5% versus revenue. But if you think about the increase on the nominal value of that OPEX base, that's actually 8 to 10%,
Mm-hmm.
So that's a significant increase. And that means you got to build and grow your revenue 10+% to be able to keep up with that, which is a challenge. And the way that we look at it, and I think best practice from all the positions that I've had, is you have to challenge all of your leaders to own their complete P&L from revenue all the way down to net income, and then force them to go through the exercise of a bottoms up build, line by line, resource by resource, of what they really need. I think that's good practice for them, just development anyways, to continue to build that financial literacy and kind of be that really elevated leader that we all want on our team. But when you do that practice, a lot of things start to pop out and the opportunity cost of some of those investments start to stand out. And then we challenge, any major investment, we challenge that department head to kind of lead a cost benefit analysis that I'll work closely with. And I would prove it out to make sure, and it might be a hit for a year, but over the long run, there has to be a clear path to profitability growth. And then we continue to hold our team accountable to that. And there's so many tools you can use to really build metrics around the performance you're getting out of every investment. That I think it's something you can build the infrastructure for without that sophisticated of a team. And then looking back on stuff, that you invested in 2 or 3 years ago, like a lot of times these softwares, particularly in our industry, have overlap. And you might be using one, product for one thing and just got another product for another, but come to find out, the other product could have done both and you just never canceled a subscription. And, as you have a lot of less sophisticated finance teams and accounting teams, like those are hard to find because once it becomes a recurring expense, it's just a part of the expense base and it's not a pop. It's easy to see the $10,000, purchases here and there that really stand out. It's like you got to really sweat the little stuff that builds because it becomes almost like a tax on the business as you add all these licenses and costs.
So Kelley, when you're working with a client and you're seeing them and they're trying to make these decisions on making a major purchase, what are you seeing on average? Are they making snap decisions? Do they have something in play that they work through? And is there something that you really want to see them start doing when they make these decisions?
I'd say I have a pretty good mixture of people who make, in restoration, we make fast decisions sometimes, right? Like we just do naturally. So I've got some people who do make like a quick choice and dive into implementing and struggle through that. And then I have people who are really good at delaying a choice because the day-to-day can get in the way a lot. So like there's a pretty good mix of people who can do both. What I have found is strongest, and if we're trying to implement change or we're trying to do something new, like you need a champion of it at all times. And just because you name somebody a champion, they may not outwardly be that yet. So you have to get them there. You have to help get them there. If it's not you, you have to figure out who is the champion and how do I get them there. And they have to be someone that you can challenge, and they're not going to be like, okay, fine, never mind, right? And be like, no, I forget it. They're going to take that challenge and say like, okay, I don't know the answer. Let me find out. Or give me a minute. Or like, yes, I figured that out yesterday. Here's what we need to know. So if you're going to dive into this, somebody needs to manage that process. And who's the best person to do that on your team? You might be surprised by who gets involved, right? Like if you say to a group, even if your group is 8 people, we want to put in place this new software that's going to help us do this, this, and this. Who wants to be a member of leading this getting put in place? You may get volunteers that you wouldn't have naturally chosen yourself. You may need to assign it to some people, and you may need to get them excited about it, but you need somebody who's going to own the process of making it happen. Far too many times we make a choice about something and then it goes on and on and on forever because we do not dive in and get scratchy and uncomfortable with it and feel the pain of what the change looks like so we can walk our colleague next to us through it. It's hard. It's hard to do. It's hard to implement change, and it gets harder and harder now because our timing expectations are getting shorter and shorter. So we are going to gravitate to what we know how to do right now that is faster than trying out the new system and putting it through its paces. So I would just say to everyone, know going in open-minded, any change that you're going to dive into, whether you do it fast or slow, is going to hurt. And you need to be ready for that. Your team needs to be ready for that. And you need to kind of have an all-in approach to it. And I'll say a lot of change right now is in the software space, right? So that's kind of what I think of the most when I'm here. Not only an all-in, but we need to have focused discussions about this. So if we already have a regular production meeting where we're talking about jobs, we may need to tack 5 to 10 minutes onto that now to talk about how the new system's going, what's working, what's not working, and who's taking away action items from this. It needs to be a very deliberate process. And that's hard to do when we're also running a business and doing like our actual jobs, right? Like it's not easy. So you need to be prepared for that, and your team needs to be prepared for that. And like, you need to be ready with pizza sometimes to just like say thank you.
there was the HR and Kelley came out right there at the end. Did you catch that, Jim?
Come with pizza.
I think it's about getting buy-in. We want to make these expenditures because they make us feel good. They make us feel like we have a bigger and better company. But the ROI comes from the buy-in of your employees using whatever it is that you purchased. And the best way to get that buy-in is to ask them, who wants to lead the charge here? So I love that. That's great advice. Jim, you had sent over a quote out of the report that I thought was awesome. And it's, we need to be better. We need to be a communications and customer service company that happens to do restoration.
I love that.
And that's a big switch from 10 years ago when we all got to be restoration companies and it was the Wild West and we just go dry the building and send out an invoice and get paid. Yep. That's not today's world anymore. We need to be a communication and customer service company that happens to do restoration. Can you expand on that?
Yeah, I think in 2025, right, if you don't know what's going on at any part of your life or where your kids are with all the technology we have and tracking everything, you just get this anxiety, right? And, there was a time where you just trusted, that the work was going to get done. But part of the reason I really highlighted that is, communication and compassion are 2 of our core values that we talk about all the time. And frankly, it's what drives the future customers and the assurance of cash flow, as we were talking about, where everybody's a collector. And when the first phone call is somebody that's pleasant, that communicates clearly and provides a clear expectation about what to expect throughout the project, it goes so much smoother for the next, sometimes 10 or 15 different teammates that have to work with that customer. And if you don't have a clear line of communication, especially with us, because it's not just one customer in many cases, you may have 5 stakeholders between a property management group, an insurance carrier, a TPA, public adjuster. So there's just so many people that need to know the information or can control certain outcomes if they don't know the information, that you have to make that the absolute priority. And I mean, if you're in a TPA world, it really is about how can you communicate the work that you did and support it more than it's about what work you did at some aspect, right? And making sure that that process is seamless for the customer or the adjuster, whoever's cutting the check, makes that check go out a lot smoother. And that's really, what we build everything in our processes around, is efficiency and ultimately being able to drive growth and put money in the bank.
So Kelley, put that HR hat back on here. And now you know how hard it is for me to say that.
I
but put the
know.
HR
I'm very
hat
proud
back
of
on.
you.
Yes, as a sales guy, I want to go create trouble and problems. I don't want to talk about my feelings. But we're going to go HR here and say, okay, if that's the case, and what Jim, obviously it's working for Thomasville and what they're doing. So we have a lot of companies that are operations first. They're operations driven. I want to go tear down a wall. I want to go dry a building. That's my passion. My passion isn't communication. My passion, I want to be good at customer service, but I really like drying the building. But if today's business and the data says we've got to be better at that soft skill part, how do you start building that into the culture of your organization? How do you start developing that?
Yeah, I mean, I think it comes a lot with, Jim said it so amazingly, right? That first phone call, right? We've got to set the stage that first time someone interacts with us. What day to day restorers are very used to, like, oh yeah, I'm going to tear this out. I'm going to set up this machine. We're good. We're in good shape. We're going to move. We're on to the next one, right? Like, but the person who's sitting there in their home watching you just like sawzall a wall out are like, what the heck is happening? We forget what it's like to watch our spaces be torn down around us, and what a disruption that is, and how confusing that is, and how scary that is, right? At times. Not to mention, like, there's a lot more emotion and heat involved in that than what I'm just saying is like a wall getting torn out. There could be possessions. There could be health scares. There could be absolutely they can't stay where they live, like all of that stuff. So there is so much emotion already in the space we're in. And I think to protect ourselves over the years, sometimes in restoration, we've put up a wall to be like, oh, this isn't bad. We're got it. We're good. We're like, and we have this bravado that comes with it because we want to be confident and we want to show them we can handle it. But sometimes taking that pause and taking that deep breath and really look, like, right, we're like photo, document. Do you ever look at those photos and like imagine that is like this wall right here, right? And just remember the feeling of what it's like to sort of have a disruption or a displacement that these folks may be going through, whether it is a home or an office or a business, right? Like, this is disrupting somebody's livelihood in some way. And we need to have that kind of awareness around it. And we need to be able to talk about that honestly with our team. And we actually need to be able to be ready to manage their emotions with it, right? Like, they may come back from a site and have dealt with something challenging. And do they have a place where they can talk about that and kind of get that out and be in that space? So for me, it is a lot about remember a time when you were disrupted, and how did that make you feel, and remember what that feels like, and be ready to provide that update, right? Like, we may know, okay, we're going to come back tomorrow, we're going to do this, good, we got it on the schedule, we're set. Did we say that to anyone in that building? Like, did we tell them we're coming back tomorrow and this is what time you can expect us? And like, there's some simple stuff too. There's so much going on that we lose track of that communication piece. And it really is sort of the most important part of what we do every day. I said for years, as I recruited people to join our company, like, anyone can tear out sheetrock and dry a carpet and set up a fan. The reason we are successful and the reason our people are successful is because they make the people who are involved in that understand why we are doing it.
Yeah.
So it's not even just the emotional part, but also like the why. Like, this is going to be noisy because what it's doing is it's sucking moisture out of the air, and that takes power, and that takes energy, and that takes a motor. So it's going to be loud. I need you to leave this plugged in, right? Like, explaining to them what the process is and because people do not deal with this day to day except for us. They don't know what's coming at them. So having that sort of ability to step outside yourself and be ready to handle their questions and their concerns. And yeah, you may have a million other things you got to do, and this is not a big job, and there's so much on your plate that, like, are you kidding me? You're asking me about this one fan? But like, yes, because it's the one fan that's in their space and they need to understand it.
The biggest differentiator in our industry is the experience you provide the client.
Yeah.
And so, Jim, earlier you had mentioned, I want to make sure I understood this correctly. You mentioned that for a long time, Thomasville was primarily a residential TPA service company,
Mm-hmm. Yep.
Oof.
which tells me half of our audience, when they heard that, probably started throwing rotten fruit at their computer screen right there.
Yeah.
But something that RIA's Cost of Doing Business report demonstrates here is TPA dependencies down. And you would think it would be going the other way, but the data says no. 53% of companies reported they do absolutely no program work in 2024 versus 45% the year prior. So while it feels like the industry is pushing all TPA, the data says no. It's actually going the other way. Do you think that trend's gonna continue, and how do you think this is going to affect the industry moving forward?
Yeah, no, I think that was a good call out. And one thing that, in terms of those numbers and percentages, so that's on number of respondents, right? Not on volume that's gone through TPA versus no TPA. My thought, probably if you were to look at dollar volume, it might not be exactly the same story, because I believe there's going to continue to be a push from insurance carriers to TPAs, because it means they can reduce their adjuster base, their cost base, and their impact really or touch on the whole process. So I think that's going to continue. I think you will continue to see contractors that aren't looking to take on that challenge. It does become more difficult every single year and probably every single month as they add additional compliance and things that you have to really do to support your work. But if you have the scale and if you look at it the right way, it can actually be one of the best growth drivers out there in our industry, because it's effectively recurring revenue and recurring business. And all you have to do is run your play and achieve, some of their scoring metrics. But if you want to pretty much guarantee growth in new geographies, it's get on a TPA, execute for that TPA, and add zip codes. And that's a tried and true method to be able to grow your business. The counter is you have to make an investment probably in coordination and administrative positions earlier on than you may have historically. But you can look at that a little bit differently because the way we view it, to operate on TPA, your processes and procedures as an organization have to be very tight and your documentation has to be very clean. And if you can do that across all the jobs that you're working on right through a TPA, then every other job that comes from a different channel becomes easier and your profit goes up when you don't have that TPA fee. And you're running a clean business where communication is at the core of everything we do because that's required by TPAs. So I would say, encourage people to consider it as an opportunity. And in terms of trying to build a business, it's a really good way to redirect marketing dollars that you're probably paying SEOs and maybe a sales team to just 5% variable costs on work that you're actually getting and doing. But understand the cost. And if you're only doing, 3 to 5 million, it is a very significant cost to add the team and the softwares to be able to keep up with it. So I'm kind of torn, but I think in terms of, when you have the scale, it's a really strong opportunity to build recurring revenue and diversify your base, because you really want streams coming in from a sales team, a commercial business development team, a residential team, and TPA business kind of all together. And that way you're getting your biggest, opportunity across your service area from all inflow directions.
I loved how you talked about it being like a new geography option, right? Like if you're looking for that new space, it is, okay, we know the system in the process. Potentially we maybe have a person we can plug into that temporarily in that geography. And now we're turning on a new zip code or 6 new zip codes, right? Right. And then you start to be able to fund the investment in that new geography.
That's perfectly articulated, Kelley, I think, in terms of how we looked at it when we've entered new spaces, where basically you build up that capacity or that inflow and demand, and all of a sudden, all right, an investment in a facility or a teammate is a no-brainer. Mm-hmm. And I'll put at the end of that conversation, collections has been, obviously a conversation everywhere in this industry, but more and more TPAs are managing that collections process. So they're paying direct more and more regularly. So if you're looking for an opportunity for some direct payment from a TPA, that could be an opportunity for your cash protection too.
I think for when we're talking to people in the audience too, TPAs are right for some people. They are not right for some other people. And really your job is to go in, research it, talk to people on both sides who are very successful at not doing any TPA work, talk to people who are very successful at doing TPA work, and then try and identify where it is. The idea that all contractors are going to stop doing TPA work is not going to happen. There are too many hundreds and hundreds of millions of dollars. The number's probably bigger than that of jobs that are going through TPAs that people are making money on. It's not going to go away, but it doesn't mean it's right for everybody. So we'd highly encourage you to take a look at RIA's cost of doing business report, look at the data, look at the numbers, look at your business, and make the decision that's best for you. But let's go back to the revenue there that you had talked about of bringing in the multiple sources. And I 100% agree with that we want to diversify where the work is coming in from. It's no different than having a stock portfolio. So one of the things that the report demonstrated was that revenue mix matters more than size for gross margin. So can you expand on that a little bit, and then maybe give some ideas on how you want to figure out the best way to put service lines together in order to create consistent profitability?
Yep. So I think it's just the nature of the work being done, right? Reconstruction includes a lot of materials being put back together, probably a little bit less labor. What labor is kind of patched in there with your subcontractor price, which includes materials. But, your EMS divisions, which are effectively just labor, you get very strong gross margins. So, it's very attractive, and I can understand why people go to start their businesses in those like mitigation, temporary repairs divisions. But, and it probably is a lower cost of entry immediately. But I think over the long term, as you grow, even though it doesn't show up in the gross margin, it's almost, you have to look at your cost of capital that you've invested in those divisions, because on mitigation, you may have $500,000 of drying equipment sitting in your warehouse that might not hit your gross margin, but hits your cash or your checkbook, right? So I think that's one thing that to keep in mind too, as you enter into some of those plays. But frankly, it comes down to like when you look at your business the way you're talking about, Jeff, and kind of what your opportunities are, if you have the capacity to handle full service across the board, it's going to be a better customer experience. It's going to result in you getting more work because the adjusters and other stakeholders like dealing with one person. And then ultimately it's more that gets delivered to the bottom line. But you almost have to find where your production capabilities lie and where your procedures really are, strong, and drive that as your core competency, and then develop up the teams around it to be able to tack those on and add additional profitability. I think it is a tough decision. You can't just make mitigation grow and stop the others. So it's almost hard to control. A little bit of kind of the demand will make itself happen. But I think you have to just run as tight of a budget on every job as you can, and put in those processes and culture that's focused on delivering profitable production across every division. And then if every division can hit their profit margin target, which we have a specific target for every division, that the blended mix is going to be in line with what you need to make happen for the year.
Kelley, do you have any tips for the audience there? One of the pushbacks I get on that is when they go to put everything into the financial reports, it's not broken out by division because they don't have proper job costing in place. They don't know what their true costs are from a mitigation versus a recon versus contents or anything else that they do. Do you have any tips that you could offer real quick on job costing so you can get a better feel on how this is working?
Job cost. Do it. Do it and start collecting the data. I mean, it's easy for me to say that. Again, if we go back to our legal pad, that's in somebody's head. They might not have been costing it out. But when we add on 2 to 3 employees who are now also making decisions on jobs, how do we know if they're doing the right things? It's by looking at what we've spent on that job and looking at the costs. So you need to start to see your trends in your area and your geography, not only for the job costs, but in what kinds of jobs you're closing. So mold, right, is a good example, right? It may be really popular or profitable in some areas and less so in others. And sometimes it's getting to the root of who's making the decision on getting that job going and happening and paying for it. And do we start to sacrifice some of that profit to get the work in the house and to sort of keep those people and those machines busy, right, that we brought on board for that work. So are there adjustments we need to make in our profit expectations as we collect the data, or do we have a loose cog in the machine we need to tighten up? So getting really familiar and focused on what are your revenue lines and knowing when you need to chop that up. So I'm a big fan of like by job type, right? Water, mold, fire, recon, certainly. If you just do mitigation and recon, that's a great starting point. I think you can probably dig in a little bit further there. We know certain loss leaders, I'll say, like a board up service is typically kind of a low profit space for a lot of folks because we do sub it out, and it is you can't make a lot of write up on that because there's such a high competition area. So do you separate out the board up from your fire job, because now you kind of want to analyze those two things separately and really see which work is gaining us the most, and do we take the hit on that loss leader in order to make it up in another space, and can we make it up in another space? Is it worth it to take that risk?
Well, let's go further into some of these costs that are out there, specifically with labor. So, and again, this is the type of stuff that you're getting in RIA's cost of doing business report, powered by KnowHow. And we're only touching a small piece. We're only doing a couple little bits of data here and there. Again, the one we got is 60 pages. Whatever's coming out to the general public is just going to be, once they gussy it up and make it look pretty, this thing's a monster, the amount of data that's in it. So definitely get this, get the report here. But what it demonstrated with overhead labor averaged 16.9%, which is down from 27% the year prior. But total overhead rose to 38.5%. Jim, where are you seeing that jump in overhead if it isn't from headcount?
I think everything else gets more expensive, it seems like.
And this was last year. That's not even 2025. So who knows what this thing's going to look like next year?
I think softwares is where most people are putting most of their investment at, and that makes a big difference. And you probably are trying to replace some of the attrition that you might feel in your headcount with software or other tools, in the spirit of automation and efficiency. And I think that's a big piece. I do think probably some fixed cost investments going on, so that'll drive like some depreciation or people entering new warehouses and facilities. As everybody's got growth on their mind, when you see like people going to conferences and talking with other peers in the industry, and just license fees, rent fees going up, utilities going up. It just seems like every line item has more and more pressure as you work down the income statement as you get throughout the year. So hard to say, but when you look, in my wallet, in my personal finances, it's every single year the bottom line's going, or the baseline's going, seems to go up, and sometimes hard to put your finger on, especially when you have 10 to 20,000 transactions running through that OpEx every single year.
Well, fortunately, we can just raise our prices that we charge the insurance company, and they'll happily pay it. So
right,
I was pass those right on.
I was going to say I think a giant overhead cost that is very variable from year to year, depending on what your years look like, is your insurance policies, right? Your general liabilities, your auto. If you've had an accident on a job, if you've had a car accident, like all that stuff now is so very variable depending on what has happened, and it takes so long to kind of claw back down to reasonable pricing that those unforeseen expenses where it's like, okay, yeah, it was a small car accident, we're fine. That swings back around and it gets you later on too. So that, it may not always be investment. It may be, we've learned some hard lessons.
Yeah. Yeah. So it's important to always kind of keep an eye out for, and this is why I think people don't understand. They look at the dollar figure on the report. They don't look at the percentage. And when you do this, you need to be looking at the percentage, and you need to know what the industry benchmarks are to see what your percentage, what are you spending on insurance versus what is the industry benchmark that is out there. Again, not in dollar figure, because I can't compare a $2 million company to a Thomasville, but I can compare the percentages that go with it. And those are some of the things, again, that you're going to find in Restoration Industry Association's cost of doing business report. So you can see how you are doing in these specific areas with, again, data that was handed to you by fellow contractors for contractors. So overhead labor's going up. We're not able to pass on all the price increases, and even worse, they're not willing to pay us on time. Even with the best collection strategies, your AR is still an issue across the board. So what the report shows is median AR sits at around 16.3% of revenue, with smaller firms up to 23%, meaning slow pay from carriers is really hitting the smaller guys who may not have the resources to be able to withstand all of that. Where else can you go here with AR to be able to get your employees to work together as a team, that it's not one person's responsibility to go get it, but it's everybody's responsibility to go chase this money? Do you hold weekly meetings? Is there...
Yeah, I think it's just the messaging in your culture. It has to be almost ingrained in everything that you do, that we collect the money. And I sit with every onboard or every new hire through an onboarding every 2 weeks. And that's the last thing that I say is I put on my PowerPoint, like, we are all collectors, and almost like put a test, like, stand up if you're part of the collections team. But like, you need that mentality. And that's the way we coach. And like, that's how people understand that ultimately they're working here for a paycheck. And like, if they went to, Walmart, they would be asked to pay on the way out. Like, we just treat it the same way. When I was a cashier at TJ Maxx, wasn't afraid to ask for the money, right? But like, why would you be afraid to ask for the money if you just did $100,000 project at somebody's house? So It's just kind of giving people the credibility and the confidence that, like, why would you not be willing to ask for the money, or why would you shy away from this conversation? It's ultimately the only way that we can continue to raise everybody up and continue to pay you. And once you start to have that personal impact, I think people really start to conceptualize and see, how important it is.
When you were a cashier at TJ Maxx, how many times did the customer come back to you and say, well, tell me what your cost was on that blue jeans so I can tell you how much I'm willing to pay you? Did that happen a lot?
Yeah, I think some people probably just stuck it under their shirt and walked out. Not much of a concern. But
I worked out at Marshall's for years. I love that we're same parent company. That's so fun.
Yeah. Oh yeah, TJX.
Yeah, TJX Corp. Yeah. I'd add on a few things that I think I learned over the years on the collection side. We know people asking for money is uncomfortable. We know that's an uncomfortable conversation. A lot of people don't live in that space. So providing the tools and the systems and the timeframes to do all those things, especially if you have invested in software. A lot of times our job management software is so focused on the job. It's like, invoice, done, I'm out. And it's like, no. A whole new process needs to start now. And do you have that in the job management software? Do you have that ability to be phone call, email, and do we have some scripts? Do we have some pre-written things that we can send out? So there's some natural communication happening before somebody's going to dive in and maybe have that conversation that makes them a little sweaty, right? What are the tools and systems that we have in place in order to do that? I also always love the idea of kind of a top 10 collections. And these frequently are big dollars or very old, but they're getting a little bit extra attention because there's something around them that, maybe has escalated them to this point. Sometimes it was a project manager who's left the system, right? And now we're sort of left to figure out what could be a confusing job without the person who had that knowledge, and maybe our system hasn't captured it all from that person. So we're struggling a little bit with it. And so this idea of a top 10, because it's become such a strong part of our culture, right? Like you were saying, Jim, when those jobs get collected, it is team celebration time. We got this one in, everyone's yeah, we get that one off the list, right? And it, it may not be, if you're one of the bigger companies, it may not be across a whole corporation, but it might be in that region, right? That's for a smaller group or a department, those are such fun, exciting wins to celebrate. This one is actually officially done, not just that we've invoiced it and it's off our production plate. Now it's fully off our plate.
Yeah.
Then it's pizza time.
And then it's pizza time.
Yeah.
It always comes back to pizza. So I love this next question because, Jim, you talked earlier about with Thomasville, you've got on board a lot of employees and keep the machine going and everything, but we don't just want to bring anybody on board. They've got to learn your style, your strategy, meet your expectations. And of course, Kelley, with your HR background. So the RIA's cost of doing business report goes into learning and development average spend. what restoration companies are spending right now to develop their employees, 49% of the budget is external training, which that I love. As a training firm like Violand Management, we want that number to be higher. It's currently at 49%. Internal, meaning, Jim, you've got people on your team, I'm sure, who are tasked with providing training to other employees. That's 23%. Software is 11.8%. Conferences are 14%. So as you start to build out your training program, how do you, and again, we have to look at ROI on all decisions moving forward because our overhead costs are just too high to be profitable if we don't. So how do you predict ROI in training moving forward? And what KPIs are you monitoring to see if the training choices you're making are working?
Yep. So I think there's kind of a couple ways to look at training. Like there are kind of the industry certifications and standards. Probably could never get away from the external training there, and I think it's a great opportunity for our team to be able to go and do those things. I would encourage everybody to spend time kind of building out your procedures to basically every process and thing that you do as an organization. We did this a couple years ago internally, and now use KnowHow, which is a really awesome product to be able to really disseminate information very quickly to your team all over geographies in little bite-sized pieces. But to almost make training pervasive in your internal culture as well. And you can just add little things that we do called Thomasville University or TVRU. So if you just have a small little meeting, but it's on some topic, just tag a TVRU, in the header of that meeting invite. All of a sudden people start showing up like ready to learn, and kind of you're changing the mindset a little bit about what training is, and set the expectation that there is a career path for everybody when they join early on, and that's going to take some of their buy-in to get there too. So it's not, and I think that drives some more of those internal training opportunities, because you're right. I mean, you can spend your whole budget, or really all your operating costs, going to conferences and going to every webinar and workshop. But there's so many out there, and I think RIA in this report is an example of opportunities to find education and find training for your team that's very meaningful, that costs very little or no money. And it's just having somebody. I think Kelley called out the champion on an internal project earlier, but like having a champion in each department or overall as an organization that is focused on really growing the employee base's skill sets and their development. Alexis Knight on our team is an unbelievable teammate in that regard, where her job is effectively to make us the best culture in the business, is the way that we look at it. And like when you invest in that and you actually do it the right way and thoughtful way, you're going to get way more back in return from your teammates. And turnover is definitely more costly than whatever you're going to invest in training, at least on tenured employees for sure.
I love that. We used to say a lot like, well, what happens if we train them and they leave, right? And like the answer to that question is, what happens if you don't and they stay, right? Like, so there's kind of layers and levels when you look at training. It's like, okay, we need to give them this skill set to do the job safely, to mitigate risk, to make sure we're delivering on our promise. Then there's an elevation step that you get to with people like, okay, they nailed it here. Now, like their next step is an additional skill set, or it's that they become like sort of the driver or the leader of this area. And then therefore they need more training and education. So it really is like a massive tool that you can use to keep continuing to guide and develop and train your staff. One of the things that I love about the cost of doing business report is that it comes with a discussion guide. Like it has prompts and it has like, talk to your team about this. How do you measure up about this, right? Like they're giving you a free, and I'm holding last year's. So it's like, I'm pointing to that. I'm pointing to that one. I have like them all right here in my little nook. But yeah, like they give you this amazing tool to for free that you can say, hey team, we got this data. Let's look at it a bit. How do we compare to this? What do we think we could do better? Are there places in here we need to look and adjust? What do you have thoughts about? The best things that come out of our company development and our people development is coming straight out of our people's mouths. And this is a great way to focus and start a discussion. And again, it's, do we already have a regular meeting where we tack on this concept, where we add this in, and we get people the chance to voice some thoughts and opinions about it.
Yeah, Jim, you mentioned Alexis earlier. If you are in the RIA, you have either met Alexis or you are about to meet Alexis, because she's definitely
outside. This
She's
is her
definitely a
office,
rising
by the
star.
way. So yeah, I couldn't even had to go to her to make sure I was presentable.
That should tell you everything you need to know right there. The CFO had to go to her to get final approval. So she's a rising star in the organization. So going back now again, I've got a CFO, I've got an HR person. We all got in this industry because we want to make money. We like helping people, but it's a messy industry. We all want to get paid. This includes your employees. And when those big losses happen and that burnout starts happening because your employees are putting in 60, 70, 80, 90, 100 hours a week, and they're still getting paid the same amount, that gets tough. That's hard for them to be away from their families. So you're seeing an increase in variable compensation plans. According to RIA's cost of doing business report, you have 40% have annual bonuses now. 30% of companies have performance-based plans. What's your thoughts on providing compensation that allows employees to get those weekly or monthly wins when they go above and beyond the standard expectation?
I think it's something that you have to do, frankly, to really drive the efficiency and growth that you're looking to do in a profitable way. I talked about trying to onboard so many people all the time and continue to build the capacity. Like that's the ultimate check is people are working to get paid, build a plan where their success translates to more money. And frankly, I'd rather build a plan where their success translates to the most money they can earn anywhere, right, in this industry or opportunity. And we talk all the time about, we build incentive plans and, ways to measure and pay for performance across our whole organization. And as a result, we have people who effectively do write their own paychecks, but you get out what you put in. And we gamify everything so that a lot of the scores that go into those metrics are, well understood. The team all kind of sees them regularly, and like you really don't have anywhere to look or to complain, if you're not happy with your compensation aside from the spreadsheet or the data that's in the mirror and driving those performance payouts. And I think it's the best tool as an employer or an owner that you're going to have to drive the performance, especially as you scale and increase your service area and your reach.
So, Kelley, when you're working with clients and they start talking about wanting to put together some type of performance-based compensation or bonus program, what are some of the biggest questions or concerns that they have, and how do you help them overcome that?
Yeah, I always caution people to start a little bit small and we can build this as we go. So like annual performance bonuses are a good starting point, right? Like our goal as a company is to hit this in revenue. And if we do, everyone earns this, right? Like that is a very kind of simple starting ground. Um, the the more you dial in to individual performance, which I think is where you want to get to and where you want to start to step to, is the more you need to be able to be confident that they can control that, right? So that we're not tasking them with compensation that they actually have no control over, right? So that they can control it, that they can manage it and see it and have access to it at any point in time. So they know how they're performing, right? As a salesperson, that is probably one of the most critical areas. Salespeople need that feed of this is where I'm at against my goal. And it needs to be easy for them to see and find. And then I'd say another caution is as these get bigger and more complex and more people are involved, you do want to make sure there's some fairness aspect that kind of as many people as possible have this ability to earn, right? Like that it's not just only certain positions have this. You want to try to carry it through the organization so that that feeling is owned throughout the organization. The other thing you have to be careful of is that is anyone's compensation motivation in opposition to someone else's? So is somebody motivated to close quickly and sacrifice profit where someone else is motivated to have a profitability threshold? And are those two people actually working in opposition to each other? And we don't realize that. So there is some hidden tripping areas and like kind of areas that can be tricky as you build this stuff in. I think it's always a good idea as you implement new things to be open and honest with your staff about we are at all times trying to figure out if this is the right way. Like this may need to be adjusted. This is in no way final. This isn't like, it'll probably be that I would lock it in for a year and make sure you're not messing with people's compensation mid-year. But you need to start to be ready in August to be evaluating how that's been going and saying, was this the right plan or are there some things we need to adjust and tweak moving forward. And it's very possible that it's percentage points, right? Like we just need to maybe adjust this and maybe little. You may not need to wipe it out and start over again. Or you might need to. Right? If it had some unintended consequences. So the open dialogue with your team about whether or not this is working and whether or not we're seeing success with it, I think is, again, one of those uncomfortable conversations in a workplace. But as we're testing out a new compensation system, you have to be ready to have those conversations.
Another thing that RIA's Cost of Doing Business report demonstrated was the staffing mix. 60% of employees in the restoration industry are production employees. And I actually thought that number was going to be higher. I was surprised that it was as low as it was. But then it goes in with the data and it shows that, firms are running with one admin for every 3 production. These are the top revenue ones. Top revenue firms are running with one admin for every 3 production employees. That's the smaller firms. They're running a 1-to-6 ratio, which makes it kind of demonstrates why with these smaller firms, it feels like the owner is drowning, because they're wearing so many hats and they're sort of maybe even overpaying themselves and underqualified in some areas for some of the roles that they're doing. So can you talk through, we always talk about production, we always talk about sales, but we don't necessarily talk about the traditional admin role. Can we go into that a little bit about the importance of the admin position and how do you effectively scale an admin division without adding to the bloat and making certain everybody is providing value to the company?
So I think the value of the admin position goes back to the customer service relationship and communication, where when you're small, you only need one person to check in on the crew once a day and then communicate to their customers. But when you have 20 crews out and about during the day, all 20 of those customers want an update, and that's more than the production team can really manage. So it's a cost of scale for sure. But I think it also is something that can kind of help drive the production and the efficiency of those field teams as you continue to get bigger. And the more that you can take off of a field, teammate's plate and bring it back in-house to somebody that's behind a computer that can type way faster, right, can read way faster, it's going to make everybody more efficient, and that team that's in the field can produce jobs faster. And I think a lot of people are afraid of that. And if you are in that 1-to-6 model, it's a big investment to add your second, admin person for that crew. But once you see the effect, and really as you scale, one of the things that's been very successful for us is continuing to specialize as much as possible. If you can have, people doing like just the French fries at a McDonald's, right? Or just the hamburger. And we talk about Chick-fil-A a lot because that is just such a seamless process and experience. But if you're just writing estimates, or if you're just talking to TPAs, or you're just producing for mitigation work, you're going to be far more efficient operating in your core competency and at your skill set than if you're trying to write an estimate, then go manage a project, then collect a check, all within, 3 different jobs in one day. So I think that's where people don't see it. When you're smaller, you're also able to manage it. But as you grow, you absolutely need that firepower, and you'll end up bringing more people back to HQ to be able to drive things from an eagle's eye or from, kind of headquarters with more vantage points.
I also I love an admin team. I think they are the drivers of efficiency a lot of times at a company, and they're undervalued in that space, and that they are always looking for a way to do 3 less clicks and type in the same thing 1 less time, right? Like they're always looking for that new avenue of efficiency and that new way to get things done faster, easier, and that can be pushed out from them back into the field, right? Where they're saying hey, if you do this and this at the same time, I'll get them and I'll do right? It's not just their own clicks they're worried about everyone's. And they are, administrators are process driven people. So, I mean, if that is going to be the way that you're able to manage your numbers, manage your company, manage your customer service experiences, they are invaluable.
Yeah, I think a lot of owners in our industry are, for lack of a better term, they're scattered. They're very busy, but they are owners for a reason, because they don't want to sit in a chair and do one job over and over and over again. They don't just want to be a fry cook and manage that piece. They want to manage all of it, but they want to do this much of all of it. And then when it gets into the details, then the things get dropped, they get lost. And a strong admin team should have the ability, but more importantly, should have the authority to hold the owner accountable. And a lot of owners don't understand that you have to give the admin team the authority to do that. Yeah, you're still their boss, but you need them. And oftentimes you need them more than they need you. And setting that expectation up early on of, hey, when I'm falling off the rails and things are getting missed, you need to call me out respectively, and let's have these conversations and let them know it's okay to manage uphill. I want to jump in for sake of time. I want to jump into a couple questions I put together for the two of you, just based off of that report, to get your insights and how you think that people can utilize the Restoration Industry Association's Cost of Doing Business report, powered by KnowHow, as effectively as possible. So my first question to the two of you, and Jim, why don't you go first on all of these, and Kelley on the back end of it. What is one cost of doing business metric that you read in here that every owner needs to print out and hang on the wall in their office and focus on?
So I think the most clear one is ultimately net income, because that's the only true, consistent profitability measure across all companies. But to me, I think it's the concepts more and just the practice of looking at your data, keeping your data consistent and clean, and then making decisions based off of what you see. And kind of something I had taken away on that is like almost prove it and then execute it is the way you need to approach any decision to make an investment. You have to be able to prove it out theoretically and operationally before you make the decision. And then you have to execute through a champion and strong processes. But really that comes from the work that you did in that evaluation phase, and then just monitor on the back end. But really the spirit of the report, I think, is the most important thing to me, where like if you really want to grow and you really want to scale, you have to be able to manage a business from a higher level. And you do that through analytics and through data rather than, phone calls and checking the pulse of every 150 people on the team.
Yeah, I love that answer. And I think I'm going to take a little bit of a different spin on it, because I'm similar to you. I'm like, all of them, all the numbers matter. But I think we say a lot of Violand, every number tells a story, right? And every story begs a question. So like, what is the data that is most important to your firm at this time? If your AR turn is great, if your AR number is in line and perfect, okay, that's a number we look at and we watch and we just make sure we're maintaining, but it's maybe not the number that we're talking about all the time. I know at different times in my career, it was different numbers at our company that we needed to focus on. Sometimes it was a profitability. Sometimes it was AR. Sometimes it was just revenue, right? Like sometimes it was our speed to, instead of time to collect, it was our time to pay. It was managing those subcontractor invoices. So I think at different times in your company, depending on where your pain point is, you're going to need to fire on those different numbers. But I'd say like have three to five that you kind of watch closely and carefully, and that maybe are in this report that you can benchmark against. Frequently they're around revenue, frequently around its AR, frequently it's around profitability. Like those are the big areas, right, that are sort of there and able to be measured. And it's just, do you have ways to track that? And if you do, are they quickly available to you so that you can do that pulse check whenever you need to?
Jim, what is one revenue stream that you think is being most underutilized by businesses in restoration?
I'd say probably contents or structural cleaning, which both fit into our specialty services division here at Thomasville. But I think those are two areas where they're not thought about at the forefront the way mitigation, temporary repairs, reconstruction are, but can provide a really strong increase to your job size and the margins that you're able to support. So structural cleaning for us was something that did take a while to train our team to be able to identify those opportunities. You go, house completely burnt down. A lot of people's instinct is, all right, well, let's just get it put back together. But you're missing out on probably our most profitable margin in terms of what we're able to do efficiency wise and deliver in terms of profit on each dollar. And it really doesn't take a lot of time, so it's not significantly delaying the team. But you have to be smart enough or educated enough with your team to be able to call those things out. And when we really launched our efforts around identifying and producing structural cleaning, we even did simple things like giving the project manager a black folder if it was a fire, just to put in their mind, like, make sure you're thinking about the whole process and other downstream people that are impacted. So I'd say that's an area where I just don't think that people are as educated enough and don't understand, how profitable it can be.
Kelley, did Jim get all 100 points in the prices right there? Or do
He
you got
100% did. Yeah, like I totally agree with the contents and firework. Firework can be intimidating to people, so it has a little bit more of like a barrier to entry. But I think if you can start to pick away at that and have that experience and like go visit your neighboring restoration companies and see how they're doing it, learn from them. I think that's a great thing. I think RIA is really good at fostering those bonds. And I'm gonna twist us a little bit on this one. Is I've seen in the last year a lot of my clients are contracting directly with homeowners, and insurance is being left out. So I'd say that is an area that it could be any of those revenue streams. It could be any of that work, right? But that for many years, we as an industry have gotten very used to not contracting with that end user. That seems to be on an upswing right now for me. And I think if you don't have a good system in place for that, you need to start working on it.
So final question for both of you. Can you give me, Jim, again, we're going to go to you first on this one. Can you give me your 1 year, maybe a 5 or 10 year prediction as well about what to look for in 2026, but then further out towards the horizon? Give me some predictions for this industry based off of this report.
Yeah, so I think 1 year out, I think even from where we are today with AI really integrating everything, I think about how we use like a dosk sketch camera to be able to generate a tour, and just all the tools that different insurance carriers are using. I think AI is going to be pervasive in everything that we do. I mean, we use ChatGPT across the organization just for minimal tasks and, frankly, document review. But that's going to begin to be very widely used. And I think the 5 year, point that we get to from that is that I predict in 5 years, it'll be very rare to ever talk to an insurance company adjuster or to ever have an in-person inspection. I think that's effectively all gone to TPAs and AI generated, bots or, adjusting.
I don't need to be on this call. Yeah, like he's spot on. I think like we're seeing AI. God, I was thinking just the other day about when I started at Violand, even in that time frame, right, within the last 2 years. I remember like my first few Zoom calls that had the AI piece coming through and being like, look how cool this is. And right, like now that's just a part of my workflow. Like it's just in there and I don't really think about it. So yes, the natural behavior that AI is going to have in our worlds. I also think like there's going to be, we've talked about this a lot internally. There's like patterns and cycles we see in the industry frequently. And right now insurance has had a rough couple of years, and we know that like that world is changing and getting examined, and they have a lot of eyes on them and they have a lot of complaints coming at them. So yes, I think there's still going to be a trend down in the people side of that. But I think we're going to see an upswing, and it may be the 10-year period and not the 5-year period where it's going to say, okay, we let the robots do their good work for a long time, but we kind of have to put the expertise and the knowledge and that level back in. And so my encouragement is to all of us now is to look at that space for learning and development for your team, right? Because that knowledge is going to start to become more and more and more and more and more and more important, because we are going to be battling data collection systems that are modeling that and putting that together. But we need to be able to prove that out in the field and be able to really demonstrate, no, this is reality. I love that ChatGPT give you this step, but you're actually missing a few steps because there is just some basics you get from being in the field and seeing that. So I think the more we're upskilling our people and that knowledge base, the stronger we're going to be in a few years. And probably the deeper our relationships are going to be with those adjusters still involved in the industry, because they're going to have that same level of knowledge.
Well, to be fair, I'm going to go to you with this next one. Hopefully we've got people interested in reading the Restoration Industry Association's Cost of Doing Business report powered by KnowHow. So how's this thing getting to the market?
Sure. So it is in its final stages of review. We got a little bit of an advanced copy. As Jeff said, like we got a long document, but it's not pretty yet. You guys are going to get a much prettier version of that. But RIA is really great about putting this up online, making it a downloadable and easily accessible document once it's ready to go, which I expect is hopefully by the time this airs, probably pretty current. So it might be within a few days or airs. Look at me, radio talk.
Yeah,
When
that's
this
good.
goes online. um, but the goal is to have it out in early November. I know RA has a couple of regional events coming up where this is going to be sort of talking points within those events. So there is a lot of planned discussion around this. RA is really good about advertising when this goes live because it is such an important document and tool for us. They themselves will do some additional probably conversations online about this. So keep the RA in your feeds. Look at where this may show up with discussions within the industry, because I think, just like we said, there's tools for you to discuss it internally. I think there's a lot of tools for people to talk about this at a greater scale, and you might catch some really cool voices giving you some interpretations of this as well as you go through.
And again, we just scratched the surface in
Oh my
what's in this
gosh.
report. It is well beyond the things that we just discussed right here. So well worth your time. Kelley, Kelley happened to mention something about a regional event. Do you know anything
Oh yeah, you
about one of
probably
these
see it on
regional
my
events?
board right back here. But yes,
Is
RIA
Thomasville
in
hosting an RIA regional event?
that is
Yeah,
exactly
why
right.
don't you
Yeah,
take us
no, I
out
better
by
get this
telling us
right, or
all
I'm
about
really
it?
going to be in trouble when I walk out the door here. But yes, November 12th in Baltimore, Maryland, we're going to be hosting an all-day event. A lot of great panels set up, and a lot of really great people and important people from the industry going to be in town. So we're really excited about it. Our whole team's charging hard for it, and I think there is even like a Top Golf happy hour the night before. So I'll be out there trying to take some money from the long drive contest. But yeah, it's going to be a great event, and we're really excited to be able to bring people into our backyard here in Baltimore.
The beauty about announcing the top flight thing is if there wasn't one before, there has to be
There
one
is
now.
now.
So well done. Well done. And again, how does somebody sign up for that, Jim?
Go to my LinkedIn and click the link that I shared.
Say, I'm
Now
at
we can
sales
take this
anyway.
one.
You're like, I don't know, I live here.
I just crunch numbers, man. Leave me alone.
Yeah, RIA.org, and then look at the events tab. You'll see there's a couple listed there. So in addition to Thomasville in November, the very last week in October, we're also going to be in Memphis, Tennessee at McCabe Construction doing another regional event. Cost of doing business is on the docket for that, a discussion there. There's one predicted, I think it's Florida in January. There's another one. So there's a couple listed out there. These events have proven to be really great. Like you get to see kind of, you may not be next door neighbors, but like you're a state away or a couple of hours away. And these are great people for you to be networking with. And the focus of these events is really to talk about like, how is this region, how is this geography dealing with some of these issues and talking through some of these issues. So they've been really great. And I'm looking forward to the two that are coming up.
Well, thank you both, Jim. Thank you, Kelley. We appreciate it. We hope everybody goes in, grabs the Restoration Industry Association Cost of Doing Business report, powered by KnowHow, and starts utilizing it and using it to make more informed decisions, to benchmark your performance against industry standards, and to continue to be the best you can and provide the best service you can for your customers. Thanks, everybody. We appreciate you watching this episode. We hope you do the like, share, subscribe, whatever the official podcast people are supposed to tell you. I'll just mirror that. And we hope you tune in next week. Thanks, everybody.